India reported a strong set of numbers in its Q4 FY13. The top line of 199 billion was higher than 188 billion expected by us. The outperformance was largely due to the incentives worth 13,000 crores received from the power companies during the quarter and an improvement in the grade mix. Dispatches of 129.9 million tons was exactly in line with our estimate of 130 million tons. Production too was flat on a YY basis at 143 million tons, which was largely in line with our estimate. If we remove the incentives received from the power companies from the top line, then the realizations were lower than our estimate. This was due to the decrease on a Q-on-Q basis in its market-linked sales of e-auctions and washed coal sales. E-auction prices during the quarter were lower on a Q-on-Q basis. Even for washed coal, the prices were lower on a Q-on-Q basis due to the decline in global prices. As a result, if you look at the average realizations, the increase in average realizations was lower than our estimate. On the operating front, the company reported a EBITDA of 61 billion, which was higher than the 56 billion expected by us. The outperformance was due to one, the incentives received, second, lower social expense, and third, a decline in their other expenditure. If you look at the cost per ton, then it declined on a Q-on-Q basis. This was due to a decrease in their social expenditure and other expenditures. Surprisingly, the employee cost was higher on a Q-on-Q basis, which was a negative surprise for us. On the operating front, the numbers were quite in line with our estimate if we remove the one-offs received for the quarter. On the PAT front, the PAT of 54.1 billion was higher than the 49 billion expected by us. This was higher by 35% YOY and 23.2% YOY. Other income for the quarter was lower on a Q-on-Q basis. This is largely due to the decline in yields over the quarter. The company has announced price hikes for its FSA customers effective from May 20th, which was a big surprise for us. This has led to an increase in our price realizations for FY14 as well as FY15. We now expect average blended realizations to increase by 4%. The impact of the 5% price hike taken would be somewhat negated by the lowering of higher grade prices as well as lower e-auction and washed coal prices in our estimate. We expect the bottom line to increase 12% YOY in FY14. With the increase in coal prices announced and the production target given by the company, we believe that at the current levels it is a buy with an upside of 11%. We have a target price of 348 on Coal India for a 9 to 12 month view.